All right. Well, we talk about the shares being down and the idea that when you had the big declines in Meta and some of the other companies earlier this week, it didn't have a huge impact on the market. We should point out that the NASDAQ 100 closed down by 1.9%. NASDAQ 100 futures here in the post-market down 3% here. So the Amazon effect, a negative here for the broader market. Poonam Goyal, senior U.S. retail analyst at Bloomberg Intelligence, joining us right now to walk us through this. Poonam, when you look at the market reaction here and you look at the data that we got out of this company today, is that in sync? Is this as bad as a knee-jerk reaction seems to make it look?
It's actually pretty bad across the board. It's hard to find something good in this press release. Sales were weak across the board. Guidance is weak. Margins are weak. I mean, overall, you know, the bright star here that used to be AWS is also weaker, both on sales and margin. So I think there's a lot to digest, but it's kind of humming the same tunes as other results that we've seen earlier, where the consumer is slowing, spending is slowing, and hence the results are much weaker than expected.
You know, Poonam, Andy Jassy, the CEO, saying we're also encouraged by the steady progress we're making on lowering costs in our stores fulfillment network. You talk about that operating margin, 2% versus 2.48% was expected. That's not good. I mean, that's how you make some money going forward. Where is the cost problem when it comes to Amazon?
Well, I think part of the miss that you saw in the operating margin was AWS-led. Keep in mind that AWS generates the bulk of Amazon's profit, and margins did come in 2 percentage points lower than were expected. So that's probably why the total margins are much lower than expected. Not to say that they haven't been making those cost-saving initiatives or that they're not tracking, but AWS is a big contributor to the miss there.
Poonam, I just want to go back to one thing here, and this is on the forecast that Amazon is giving. Net sales 140 to 148 billion, but I'm looking at their operating income forecasts. The street was looking for 4.66 billion. They're providing a range of 0 to $4 billion. Now, I'm less concerned about the fact that this actually misses the street estimates, and a little bit more concerned here about how wide that range is. And I'm wondering, A, why they would provide such a wide range, and two, do you think that's going to be problematic here going forward?
Well, the wide range is probably a function of two things. One, fourth quarter, right? It's a big quarter. It's holiday quarter. We know there's a lot of inventory across retail, and there will be promotions and markdowns. So we don't know where margins will really end up to be. It'll be a function of demand. And second, if AWS margins continue to tick down or are weaker like they were in 3Q, then that's also going to impact profitability.
Talk to us about the profitability that they are having to still hire, what they told the market, 150,000 people for open seasonal full-time, part-time roles. When we heard that number previously, we were like, oh, that's good. Amazon's still going to be hiring, still thinking it's going to be a big consumer holiday season. But is it when we get in that guide of a slowing consumer here? What are the reads?
Yeah, I mean, they have to hire, right? You're talking about a quarter where sales are going to be anywhere north of $65 to $70 billion. And that's a significant increase from the prior quarters or the earlier quarters in the year. So they need the infrastructure and also the support to fulfill these orders. So the holiday hiring is evident. Is it going to transfer into double-digit sales? Not likely. I mean, that's what the guide suggests. So we are concerned with the slowing consumer environment and its impacting Amazon too, even though they had that second Prime Day, right, in the fourth quarter.
Which no one noticed.
Well, so Poonam, it raises the question about where investors should look to for cuts. I mean, this is a company that has sort of being lean in its DNA. I mean, Jeff Bezos in the early days prided himself on using old doors from Home Depot instead of buying actual desks because they were cheaper. Where can the company cut?
I think they just have to go back to their investments and really think critically about where the growth is and invest there. We saw them pull back on the project, regarding drone delivery, and there will be others like that they'll just have to pull back on temporarily or forever because it's not going anywhere anytime soon.
Sort of leads us to a big picture question, Poonam. This is an investor base that was patient while the company took a lot of the profitability from AWS, used it to subsidize the retail, the logistics, the sort of freight company that Amazon had become. How patient is this investor base going forward?
I think the investor base is losing patience. We see that in the market's reaction, right, for tech stocks where profitability is really in play and growth is slowing. You can see that at least this year. So it's about reigniting growth, reigniting profits. We still firmly believe that AWS can be more profitable longer term. So there is, hope that profits will get better. But on the retail side of the business, wages, distribution, fulfillment, these costs don't appear to be going down, and that's where its struggles will lie.